Every single month, we hear about somebody, an analyst, an expert, a billionaire, an investor, a famous investor, calling for a market crash, calling for a 40 to 50% correction, calling for something that will bring everything down. So in this video, I want to share with you my opinion on this question. Is it time to start shorting the market? Is it time to sell everything because we are going to go down 80%, almost like, you know, some of the experts on the street are calling? All right. So first of all, let's look at what happened today, because today, I believe today is one of those situations where the market just kind of panicked, sold on pretty much no major news. All right. Looking at the Dow Jones, for example, as you can see, the Dow Jones gained almost 300 points today and was really poised to have a very strong green session. But, you know, right before the close, everything just dropped. And when you look at the rates will possibly explain why the Nasdaq dropped today, because whenever rates will go higher, take the tech sector, all right, the Nasdaq composite, which is forming the benchmark or the index where we have most of the tech stocks, they will tend to pull back. All right. So I will understand if the Nasdaq will pull back, but when you actually compare the all three major indexes, there is not a consensus. And by that, I mean what? I mean, just on the last month, you can see that the S&P 500 gained 2.5%. The Nasdaq gained 4%. But the Dow Jones, where we have most of the companies, it's still lagging. And if I add the Russell 2000 here, it's pretty much the same story. All right. So you can say, I mean, personally, I will expect the Nasdaq to really be the first to pull back here, because 2020 was really where these stocks outperformed in 2020 and continue to outperform in 2021. But they cannot continue to bring the stock market higher. At some point, it has to take a breather. They have to breathe and pause a little bit. The fact that we have these two lagging, especially as we get into a full recovery of the economy in 2022, to me, it doesn't give me that confidence where it is time to pull the trigger and start selling everything. Why? Because when you look at two main things, the first item is there was uncertainty around Jerome Powell, whether or not it's going to still be confirmed at the head of the Federal Reserve. All right. So that was already priced in last week. And now that he's been confirmed, there is no reason why the market will pull back, because the investors and the market already knew so far exactly what his agenda was. So it's not a surprise that on what the Fed will do for the remaining months, especially the remaining, I mean, when it comes to 2022, the agenda they have for the monetary policy. So that is cleared out. Now, the second thing I'm looking at is the earnings. Corporate earnings are still very strong. I mean, look at how consumer goods, all right, staples, you know, the Target, the Walmarts, the Home Depot, the Lowe's, they had pretty strong earnings. So the supply chain issues, which is another risk as we get into 2022, we'd also partake into the whole inflation thing. It's not that bad. And that's why I believe the whole inflation thing is going to be just temporary. Why? Because in 2020, all the factories were down. The economic growth was very, very, very slow and low. Why? Because nobody was working and the virus pretty much shut down everything. But people kept buying stuff. And because people kept buying stuff, when factories started to reopen, they had everything in back order. But it hasn't stopped. It hasn't. People are still buying, and we've seen that on earnings of those consumer goods and staples companies. All right. Now we are entering the holiday season. Thanksgiving, Christmas, people are going to travel. People are going to buy Christmas gifts. People are going to buy stuff. All right. So it is going to actually sustain and confirm that the economic growth, it is still pretty strong. All right. And especially for the US economy, where 2/3 of the economy comes from the domestic purchase power from the consumers. So if the American people are still very poised and well positioned based on the amount of savings they had in 2020, personally, I'm not afraid about the economic growth. And that's why I believe this is just a tantrum the market is throwing based on no news. I mean, I may be wrong here, but with the information and the data I have now, especially when I look at the corporate earnings, when I look at the economic growth, when I look at the supply chain issues and how these companies are navigating this and what they are foreseeing to be in 2022, I think it's just a matter of things to be balanced. And based on that, yeah, it is true that the markets people can argue, that the market are still very high, but it's not all of the pockets of the market based on what I'm looking here. So I will continue to be bullish because we are on a very strong bullish trend, but I will also expect some pullbacks, which are always healthy for the market to take to continue the run up, especially as we get into this strong, hot holiday season. So if you disagree with me, please, I will be welcome to read on the comment section. Until then, I see you in the next video.